Hello and welcome to this Astranti Strategic Analysis video for the Strategic Business Leader ACCA exam. In this video, we're going to go briefly over some of the key topics, key concepts, parts of the SBL syllabus, etc., and how they apply to Corjetz. And by the end of this, we'll have a good idea of what the organization is ultimately trying to achieve, where it currently is, its current market position, and what kinds of strategies it can implement to get from where it is now to where it wants to be. But before we begin, we'll just do a brief overview of what the case is. And of course, I'm sure you are aware that the low-cost airline industry is the primary focus for this Strategic Business Leader exam. And it may not be something that many of you are familiar with. Now, of course, you're probably familiar with the idea of an airline, the idea of a low-cost airline. You've probably been on a plane before, etc. But the actual logistics behind the industry may not be something you are aware of, may not be something you've ever thought about. So what we're going to do is look through Corjetz now. And of course, it is a publicly traded organization, meaning it trades on the stock exchange, and it's based in Courland. And Courland is a country within the continent of Hungary, which is a developed economy, a developed continent, and has a trading bloc as well. So an interesting business for us to take a look at. So let's begin. And as I briefly alluded to, how we're going to analyze this is by looking at the rational model, just to basically give us some structure to this video. So looking at where the organization ultimately wants to be, where it's heading, what its values are, where it currently is, looking at the environment and how it's going to bridge the gap, or how it's going to continue to keep doing what it's doing to ensure that it keeps on track, doesn't fall into that strategic drift trap. And how we'll break this down is with the where it wants to be. We'll look at the mission, the vision, the values of the company, look at how it can check its performance, and of course we've been given some of those KPIs and various different performance metrics within the pre-scene. Look at the governance of the organization, that's very important. The ethical and social responsibility, environmental obligations of the business, what is imperative that the business does in order to succeed, and also its stakeholders, because of course stakeholder management, leadership, etc., that is a very important part of the SBL syllabus. We'll then look at the environment by looking at the PESTEL model, so looking at the greater business environment, the 5 forces, so the more specific industry environment, and finally the internal environment of the company itself in a SWOT analysis. And once we've done that, we'll look at how it can put a strategy in place, starting by establishing its generic strategy using the Ansoff matrix to categorize the risk factors and the potential sorts of plans and projects the organization could do, and how it could actually grow as well, before looking at defining what its overarching strategy should be and some key strategies, key concepts for it going forward. So quite a lot to get through, but hopefully by the end of it you'll have a good idea of the organization, about its values, about the environment, the strategies that it could implement, and that will be really useful for you heading into your Strategic Business Leader exam. So let's begin by looking at the mission of the company, the vision, the values, what it does. And this is essentially to stop that idea of strategic drift, where you have one common goal for the company. That's a very important part of leadership, a very important part of general management of a business, is to have a purpose, something that everything that the business does is working towards. And so it's useful to identify what the purpose of the business is. And this should be fed through as well into the what we do, into the mission, into the values. So of course the mission statement of Corjetz was to connect the people of Hungary through affordable and sustainable air travel. So that is part of the purpose of the organization. It exists to connect the people of Hungary. That's why it exists. What it is hoping to achieve is to continually connect the people of Hungary. You then need to define what the strategy of the organization is, how it's going to compete, the range of business. Well, we know that we are in the air travel industry. the low-cost air travel industry. So that's how we're competing. We're competing within the airline industry, and we're competing by being a cheap, convenient provider. And that's how we've grown over the last few years. Then have to define what your organization stands for. What are the values? We know the values of the company are to be innovative, health and safety, consumer trust, the people as well, the employees of the organization, valuing the people, training the people, retaining the people, sustainability to the environment as well. All of these were values of the organization. And that also helps you to define how you're going to compete. It stops you from perhaps doing something that's not within your values. So for example, if our value is all about convenience, it's all about low cost, it's all about efficiency, it's all about innovative. So suggesting something which is not innovative, suggesting something which is going to be expensive, which is going to be inefficient, that goes against our values. And then also the policies as well. The policies are the principles that people within the organization, how they will act to ensure that the organization is achieving its purpose, its strategy, its values. So these are things that need to be embedded within all members of staff, need to be embedded at all tiers in the hierarchy of the organization. And we know that the company does have this mission statement. It does have these values. It has this purpose. It has this strategy. It has these values. So what we should be doing is looking to make sure that we are maintaining that purpose, that strategy, that values, and making sure we are analyzing our performance based on that, so how well we are achieving those aims. And so something like the balanced scorecard might be very useful here, because that's useful for breaking things down into the financial perspective, into the learning, so that's about innovation, internal, that's internal efficiency, and also customers as well. So making sure we are financially well off, in a good financial position, that's very important for the continued existence of the business. The innovation, we need to be an innovative company. That's one of our values as a company. Making sure we are efficient, making sure we are in control of costs. Again, very important for us as an organization. That was specifically mentioned in the pre-scene. And also the customers as well. The customers are at the heart of it. And ultimately, we want to be providing affordable, convenient transport as well. These are all parts of our goals as a business. So with that in mind, let's just take a look at some of the metrics we can use here. And we were given quite a few in the pre-scene as well. So for example, for financial perspective, the obvious one in things like profit. We know we're profitable. We had a 10% profit margin according to the pre-scene. And it's very important for the organization's longevity and also for shareholders, etc., to have that profit. It means we can reinvest in the organization. We were given some other metrics as well, the revenue passengers per kilometer, so that's a good idea of how well we're doing both from a financial and an internal perspective. The revenue per available seat as well, looking to improve that metric means we will improve our profitability. Return on investment for projects, we've got that return on capital employed in the pre-scene, it was 12%, and also ensuring we have a positive continual cash flow as well, that the seasonality of our business doesn't impact us too much, because of course people still need paying, staff members still need their salaries paying regardless of whether we've got more money coming in than going out this particular month. So over a year we might be profitable, but we also have to ensure that on a week by week, month by month basis we have a positive cash flow as well, because that can lead to problems if we don't. Learning perspective, good ways of looking at that. The growth would be, have we brought in any new services? Have we brought in any new routes? Have we brought in any new clients, for example? Have we expanded on our services, improved on our services, implemented new technologies, implemented new innovations? These are other things that we value as a company. So making sure we're noticing and we are highlighting when we have brought in new innovations, when we've implemented new technologies, is an important part of that. From an internal perspective, this is the more operations, the day-to-day, so the staff retention and staff turnover is a good example of that. The available seat kilometers, again, another one that we were given in the pre-scene, as well as the load factor. That's a good measure of utilization and punctuality. If we're constantly arriving late, then that's not efficient. That means we need to work on that. Other things as well, quality control, safety records, important to the business, employee satisfaction, all goes into staff care, staff retention, one of our values and a key factor for our company. And of course, ultimately, as with many businesses, all of it is to do with the passengers, all of it is to do with the customers, ensuring that the customers are satisfied, ensuring that our passengers are satisfied, measuring how many passengers we have as a good start, measuring their satisfaction, another factor, number of recurring customers as well. How many people fly with us and then fly with us again? If they fly with us once and never fly with us again, maybe they weren't happy with the service that was provided. So these are all good metrics for us to look at, good things for us to take stock of when we're looking at our growth, we're looking at our efficiency, we're looking at our management and our performance. So some good measures there for us to focus on for Corjetz. Then on to governance. Governance is an important SBL topic, of course. It's one of the key topics, and this is all about ensuring that organizations are administered in a way that is beneficial for stakeholders and ensuring the longevity, sustainability of the business, very, very important. And generally good governance includes things like ensuring you have a separate chairperson and CEO, independent non-executive directors, make sure you've got those committees, the audit, nomination, remuneration, making sure that you are focusing on control, your reporting, your financials, make sure that the directors have the right information to make decisions, that they're all involved, including the NEDs, and that you have regular meetings with those big institutional shareholders. We know that we do have big institutional shareholders. The pre-scene specifically stated that 80% of the shares are held by big institutional shareholders. So making sure the directors are communicating with them regularly, make sure the directors are having those meetings with those shareholders is crucial to good governance. But also ensuring that they have an annual general meeting as well, because every single shareholder, regardless of whether they have 1 share or 100 shares or 1 million shares, is allowed to attend that, is allowed to have a vote in that meeting. So how does this potentially apply to Corjetz and to Corland? Well, of course, there is a potential for an agency problem in this situation. The pre-scene specifically said that the founders no longer own shares in the company, no longer run the company. It's directors that run the company. And of course, 80% of the shares are held by institutional shareholders. So there is the potential for the agency problem. Just again to define what the agency problem is, I'm sure you are aware, but just to run through it, it's where you have a situation where the people making the decisions for the company are not actually the owners of the company. The shareholders own the company, but the directors make the decisions. So you have to ensure that the directors are making decisions that are beneficial for the owners. The owners want long-term sustainability, long-term returns, long-term profits, etc. Directors might want short-term success to meet their targets. Now, of course, if this means sacrificing quality, if this means cutting corners, etc., to meet those short-term targets, that may come at the expense of the long-term goals of the company. So it's very important that you have governance in place to ensure that doesn't happen. If the directors of the organization think, well, let's cut all these corners, meet our targets, get our bonuses, move on and become directors at another company. It doesn't matter that we jeopardize the sustainability of the business. That's someone else's problem. That's exactly the situation you're trying to avoid here. That's what the agency problem can cause, and governance is the solution to it. Now, at the moment, it doesn't know if there is a specific requirement in Corland. For example, in the UK, there is a requirement for companies to implement the governance code. But we don't know if that is a requirement in Corland at this point. But regardless of whether it is a requirement, you should still implement it. It's good practice to implement a governance code. It doesn't matter if you're a public company, it doesn't matter if you're a private company, it doesn't matter if it's a requirement, if it's not a requirement. You should just do it anyway because it's the right thing to do. It is about running the organization well for the shareholders and stakeholders. And they do have a good balance of the NEDs and the chairperson. They have got 5 non-executive directors, including the chairperson, and 6 directors or executive directors. And this is very useful for bringing wider experience to the board. It means they can review and check decisions. Things that weren't necessarily clear at this point, though, although they do have an audit committee, is the relationship with the external auditor. Information about the external auditor was not provided. And this, of course, would be things like your your accounting firms, your PwC, your KPMG, etc. Are they coming in and are they auditing the accounts? What's the relationship like there? What is also good positive from the perspective of governance is they do have all the committees. They have the audit, remuneration, nomination, also the safety committee as well. And these are all parts of good governance as well. It means you've got a committee that is overseeing the controls within the organization. You've got a committee that is making sure that the right people are being appointed to the board, that the directors are not being paid unfairly, etc. And also you've got that safety committee as well. So you're ensuring that health and safety, which is an important critical factor for this organization, is being implemented and being expressed throughout, ensuring that all staff members are working together to help with health and safety. One thing I would point out though is that for example, does the chair sit on those committees? The committee should be staffed solely by people who are non-executive directors. You shouldn't have executive directors sitting on the nomination committee, the remuneration committee, the audit committee, etc. For example, why on earth would an executive director be allowed to sit on the remuneration committee that decides the executive director's salary? I'm sure everyone would think that they should be paid a lot more than they are, and that would be a big conflict of interest. Now, the chair is allowed to sit on those committees, but they are not allowed to chair those committees. So each committee will generally have about 3 people on it and will have a chair and 2 other members. So the chair can be on the committee, but one of the other NEDs will need to be the chairs of those committees. There wasn't any real mention of the meetings that they have with the shareholders, although we know that they are big institutional shareholders, or information at this point. Doesn't mean they don't have it, but there's just no real mention of it in the pre-scene, and also no plan of succession. And that's the role of the nomination committee, is to have this plan. And this is ultimately about making sure you have the right person ready to step into a role should a director leave, because it can cause a big impact on the share price. It can have a big impact on market confidence if a director were to suddenly leave, and that can often jump back up once a replacement is in place. Now, of course, if you don't have any replacements lined up, it can take weeks to find it, and that can snowball and continue to increase that lack of market confidence. Whereas if you've got someone who's ready to step in right away, then that can help mitigate that problem. So that's governance. Another important part of effective management for the organization is efficient and good ethics, good corporate social responsibility. We know that there are issues that arise from the case. We know that environmental impact is a big factor here, that legal and safety responsibilities and sustainability, big thing here, as well as it's ethical to make sure that all your stakeholders are taken care of, that you are not unfairly impacting other stakeholders. And that also ties in with good staff management as well. And data management, which of course there's a lot of data in this as well, a lot of these mobile apps, and they're tracking people's details, reports, boarding passes, all those sorts of things. A lot of data is being collected on our customers and also for our suppliers, etc. So we have an obligation, of course, to make sure that that data is effectively curated, that it is safe, that it's secure, it's not vulnerable for cyber attacks, or we're not misusing that data as well. If we say that the data is going to be secure and not sold to third parties, and then we do sell it to third parties, and then our passengers get loads of spam emails from advertising agencies, etc., then that's not going to be good data management, which is unethical. Whilst we are a company that's committed to that, it's on our values, there wasn't any, at this point, any express information about corporate social responsibility, about any projects or anything like that that they undertake. But what they do is that they do have a commitment to environmentally friendly aircraft as much as possible. We've got younger aircraft than lots of our competitors, so that is potentially an example of us being socially responsible. But there weren't any specific examples of that. Now, that doesn't mean that I don't do them, we just weren't giving it in the pre-scene. And other ethical issues that may arise might be things to do with a lack of governance. But of course, we can talk about that. We've already spoken about governance. The code of ethics that I'm sure you're all aware of, you've been learning about throughout your ACCA studies. That's also important as well. Ethical questions may come up. Not saying necessarily that they will come up or that is a likely issue as such. Not saying that anything is particularly more likely than others. Anything can be examined, but making sure you are aware of that ethical code is very important, as I'm sure you are aware. And also bribery. Do make sure that you don't try to justify any kind of bribery, because that is always seen as an unethical action. So in order to achieve all of this success, in order to make sure that purpose, that strategy, those values are maintained, in order to ensure that they reach their goals of providing sustainable, affordable transport, etc., we have a few important factors that they must either build or continue to maintain, etc., for them to succeed. So here are a couple of the critical success factors for Corjetz. Again, this is not an exhaustive list as such. There are other things that you might think of as well, just giving you a few key points here. So things like continued relationships with their suppliers, with their buyers, with their passengers, etc. Good, effective relationships and mutually beneficial relationships, very important, particularly with the key partners. Did mention that they had key partners and key stakeholders. This would be things like your air traffic control, your airport regulatory bodies, also the airports, and the aircraft manufacturers as well. All of these very important. Quality and reliability, crucial, because quality and reliability leads to competitive advantage, because better quality, better reliability means more efficient and more safe, which of course are values of the company, and this helps to maintain our reputation. And retaining those skilled and experienced staff members also allows you to be efficient, allows you to be more reliable, allows you to maintain relationships, allows you to have that higher level of quality, because you don't want to be wasting time training inexperienced staff people, wasting money training inexperienced staff members, because the better that they are, the better they can do the job, the more naturally efficient you're going to be. And efficiency is absolutely crucial for maintaining our low-cost offering, which is crucial for maintaining our competitive advantage. And finally, before we move on, stakeholders. Huge part of the SBL syllabus, maintaining stakeholder relationships and treating your stakeholders well and being aware of your stakeholders and managing your stakeholders is crucial to being an effective leader within an organization. And the best way of analyzing stakeholders is use the Mendelow's matrix, very simple way of expressing your stakeholders. You've got the interest across the top, so that's to what impact they can have on your strategy, or to what extent that they will be impacted by your strategy. And then you have the high and low power, and this is to what impact they have on the actual strategy creation. So for example, someone that's low power, low interest, means not really interested in what you're doing, wouldn't have any power to do anything about it anyway. Well, you can treat them with minimal interest to an extent. Someone that's got high interest but low power means, of course, you need to keep them updated because they are interested in what's going on, but they have limited power, and so on. So for minimal interest, you'd have members of the public and individual passengers. Now, of course, if you were to have charter companies, if we were to go down that route, they might move over into a different category as they're more powerful. And of course, not saying that we should treat our passengers with minimal interest. It's just at the end of the day, they don't have any power to do anything about it particularly. For example, we don't have to keep constantly keeping our passengers informed about things, etc. Although we could potentially do that, so you might potentially want to move passengers into that keep informed category. But members of the public that aren't actually customers of ours, there's very little that we would need to do with them. They're not going to be interested. They'd have no power over us. Whereas our keep informed would be maybe our smaller partners and our employees. So we do want to keep them updated on what's going on, but they don't have that much impact on our strategy. Because the vice versa, this is your keep satisfied. This is your stakeholders that have a lot of power, but maybe don't care too much what you're doing on a day-to-day basis. So this would be your regulatory bodies, that airport union, or that may move over into the key players if we do need to be speaking with them regularly. The government, as long as they're not breaking any rules, etc., paying our taxes, not going to be too focused, although at certain times they may move over to key players. when of course there's any kind of political issue. Airlines is quite a geopolitical issue, so occasionally it may move over when they want more information. And lenders and banks as well, as long as we are paying our interests, we're paying back what we owe, again, they're not going to worry too much about what we're doing. But they may have power to stop giving us any more money if we need debt funding, etc. Or they might, call in claims against us if we're not paying our bills. So then they would have a lot of power. But as long as we keep doing that, we're keeping them satisfied, they're not going to worry too much. And then for key players, so this is ones that have a big interest and have a lot of power, this would be your major shareholders, the institutional shareholders, the strategic partners, key airports, key aircraft suppliers, etc. Air traffic control, they're going to want to know what we're doing and of course have an enormous impact on us, would be able to ground our planes if they wanted to, etc. So very, very powerful. So they are the keep close. So that's the stakeholder analysis, and also just an overview of the overarching future of the organization, or overarching where we want to be, what our direction is heading, what our ultimate strategy is. And of course, we don't want to be guilty of any strategic drift and things like that. So with that in mind, now let's take a look at where we are now, what the current environment is like for us here at Corjetz, because that's also very important, an important part of the SBL syllabi. So we'll start by looking at the PESTEL. So this is the overarching environment, the greater environment, the world in which we operate in. It's not necessarily specific to the airline industry, it's just the environment in which we exist. And that's ultimately, I'm sure you're aware, a breakdown of the political elements, economic elements, social, technological, environmental, and legal. So for example, with politics, the 100-year governments are very important to us. If there's a big falling out between governments, of course, that's mitigated by there being a bit of a trading bloc. But political relations between countries, for example, Brexit, that had a big impact on political relations between the rest of Europe and the UK. Anything like that, or any kind of issue that goes on with particular countries could cause a problem. So that would be something we're aware of. So for example, if we fly to a 100-year country that isn't part of the trading bloc, and that country falls out with the trading bloc, and then all of a sudden there's all kinds of additional tariffs and things put on that, it could make it very difficult to continue flying to that location and back. And also governing bodies ultimately give the power to regulators. So a change of government that gives more power to regulators would potentially have an impact. With economics, thinking about the Corland economy, it mentioned in the precedent it was cyclical in that when the economy is up, airline industry is up. When the economy is down, airline industry is down. So that's specific to Corland. A lot of people within Corland are going to be using Corjetz. So if the Corland economy goes down, if the value of the Corland dollar goes down, that's going to have a big impact on our business and on our passengers. But likewise, an impact on the economy from a global perspective, from the 100-year perspective as well, will have an impact. And of course, the maintenance and the fuel cost. Changes to that, the fuel price would increase dramatically if there was to be a big cost of living crisis, and the cost of the maintenance, the cost of the ground handling, etc. All of that would go up, would again have a big impact on our costs. Socially, a lot of important information there about how we market ourselves to our demographics, the consciousness of passengers, and the impact on the environment of air travel. Very, very well known. There's a lot of public consciousness about it. We know that it contributes 3% of global emissions, etc. So using that CO2 per passenger statements and things like that would be good marketing there. Using the fact that we have more efficient planes, all good for our marketing. Specifically said in the precedent about people being very aware of it. Technological, any kind of developments, further automation, AI and industry trends, we need to be at the forefront of that. It's specifically again said the values of the company, all about automation. It gives us lots of examples of ways in which we've already done that. Automated check-in, or automated boarding passes, all of those things. So any development in the technological sector that will help us, that can be implemented to help us in our industry, again, we need to be the forefront of it. And then environmental and legal, quite related, particularly with regards to things like safety and changes in the law, new government regulations over emissions, what impact that's going to have on the industry, and with regards to sustainability, which again, very important for us here at Corjetz, and it's something that we are committed to achieving as per our what we do, as per our mission, as per our values. So the actual industry as well, we can see that it's quite impacted by changes in the economy, changes in politics, and could be impacted by big disruptive changes in technology or by new legal environmental regulations. So what about our competitors? Well, of course, we've got the LKK, we've got Breiger, we've got competitors in there in the pre-scene. We've got information about the buyers, suppliers in the pre-scene as well. So we can start pulling together our 5 forces analysis. And this is all about the competitiveness of the industry. So whereas the PESTEL was looking at the greater environment, we're now looking specifically more at the low-cost airline market. So what kinds of things will impact buyer power? Well, the buyers primarily of our services will be individual passengers. So, of course, they may not have that much power given their actual size themselves, but it would increase the fact that it's very, very easy for them to switch. They don't have to use Corjetz. Now, if you go on holiday and you fly with a particular airline, you have no existing contract where you need to then fly with that airline again. You could fly, you just pick whatever flight is available and what's the cheapest, or etc. You don't have any real need to keep with a certain airline. You can switch very easily. There's absolutely no obligations whatsoever. So that does increase the force. But of course, the fact that a lot of our buyers are individual passengers, the fact that we are very big, we are one of the main low-cost airlines, we are able to provide at a much cheaper cost than a lot of the competitors. There are limited alternatives, particularly out of Corland, for example, because LKK, Breiger, etc., they operate primarily out of different countries. They fly all around Hungary, but they operate out of those different countries. And we have a very good reputation, good punctuality, good passenger satisfaction reviews, etc. So a lot of that decreases the force and may give a fairly low buyer power, really. Now, with suppliers, on the other hand, that's different. Now, there are perhaps some suppliers we could switch from, perhaps companies that provide the food for the flights or the softwares, etc. We could switch, could be quite generic, but a lot of our partners are going to be absolutely critical where there is no real way that we can switch. For example, if we've got companies that produce aircraft for us, there's a very limited amount of them and switching costs might be expensive, etc. We also, with the airports, there's no real getting around that. If we need to fly to a particular airport, we need to fly to that airport. We can't, well, we'll use a different airport. Well, there's no other airport near that city. We have to fly into that airport. So the suppliers, very, very big, very powerful. So the supplier power is likely to be far higher, as is competitors, because it's a very mature market. We have several very large competitors. But might decrease slightly given that we are one of the absolute lead players. There's about 30 airlines and 3 are very big. The other 27 are medium to smaller. So our market position could reduce that, but our competition within that market, with that mature market, big players, when a market is mature, when it's not growing rapidly, it's very difficult to maintain your position and to grow your position without actively taking away market share from competitors. And that makes it a very competitive industry. Now, if new entrants might be low, might be medium, depending on whether conglomerates, full-service carriers do look to enter the low-cost markets. But for anyone else, it might be quite difficult. For example, you couldn't finish watching this video and I'm going to start a low-cost airline. It'd be incredibly difficult for you to actually enter this market, particularly given the need for the resources, the cash, the relationship with the airports, etc., the knowledge of the marketplace. Very difficult to enter, particularly given the work that we and our biggest competitors already have that brand, have that reputation. And substitutes, you could argue that a full service carrier is a substitute or a direct competitor. I put it in substitutes here because we're not competing directly with them in the low cost airline market. Also private jets, rail and sea transport as well. It did say in the pre-scene that people were looking for alternatives for it. But the comparability of alternatives, if you want to fly cheaply to a certain area, then there isn't that much much alternatives for it. You can use a different company that does the same thing, but if you've got a landlocked country, it's very difficult for you to use sea travel, for example. It's very difficult. A lot of rail lines don't operate to a huge extent across all of Europe. There's much more limited and it's a lot more time consuming. So the actual comparability of the alternatives versus a cheap low-cost airline means that the substitutes perhaps is a bit lower. But overall, we can see it is quite a medium to high competitive market. It is a mature market, so we expect that. And that may lead to fairly low profitability. And of course, our profit margin was only about 10%, and it had been lower than that in previous years as well. So we can see that it is quite a low profitability industry. So now look internally at Corjetz itself, and similar to the success factors, the stakeholders, etc. This again is not an exhaustive list. There are other ones that you may think of. Just giving a summary of some of the key weaknesses here. We're a large company with reputation, prestige that helps with passengers, that helps with staff as well. Good relationships with those key stakeholders. A reputation for quality, affordability, efficiency. Large company as well that helps with that idea of safety and security, and also it makes us a listed and a safe investment as well, particularly if we can promote the fact that we get a good return on capital employed. So if we want future investors in the future, that's a strength for us. Of course, weaknesses, didn't really see much about the corporate social responsibility, which could be a weakness, particularly in this general market nowadays, the industry where people are conscious about that. We do have we're quite reliant on fuel price. For example, if the fuel price were to increase dramatically, that could eliminate our profit margins, which are already quite short. Our punctuality, or quite small, our punctuality rate, which is crucial, is also falling as well. Now, it had jumped up from a few years ago, but it has been following a trend of decline in the last couple of years. And something I've already mentioned a bit throughout the pre-scene analysis is that one of the issues that you do have when you have people that are coming to you because you're a very low-cost provider is there is the weakness that the consumer, the customer, will be loyal to the price rather than to the loyal to you as a company. And then opportunities for the company going forward. We have the various different Ansoff options. We think about, could they enter new markets? Could they produce new services? Could they enter into more developing countries as well starting to have a lot more business travel, and that would tie in with could they have a business class, etc. But also provide a cheaper way for those clients to come to different countries. Perhaps if you've got a developing country where they're starting to open up business links with and tourism links with more developed countries, but the actual cash available in those particular countries is still quite low and the disposable income is still quite low, you perhaps can offer a cheap way of getting to these more developed countries. Technological developments, always important. Multi-regional, international, spoke about that, whether you could look into expand the international market or to replicate your regional approach in different regions. That way you are expanding overseas without actually affecting your business model to a great extent, because of course the international travel is a lot different. It relies on having much larger planes, flying larger distances, may involve using the hub and spoke model rather than using the point-to-point. Also, potential military, government, private planes, that was mentioned in the pre-scene as well. So lots of potential opportunities, but of course there are always going to be lots of threats as well. So threats to the prices, threats to the cost, threats to your reputation, staffing issues, cyber risk, a cyber breach, website downtime. All of these are big threats to the company. And as you're preparing for the exam, or if you're answering questions in the exam, maybe think about how you would deal with threats to the company. So now we have looked at a brief overview of the organization's position in the market. strengths, weaknesses, opportunities, and threats within it as a company, looked at the profitability of the specific industry, and also factors that impact the general marketplace as well. Now what we can do is look at our bridge, look at the kinds of strategies for the company, the kinds of things it needs to either do or keep doing in order to keep moving from its current position to ultimately ensure it's meeting its purpose, its strategy, its values, as we discussed in the future section. So we'll start by looking then at the generic strategy. And the generic strategy is just an overarching concept behind your strategy, and very useful for using that as a base when building on it, when deciding other sorts of more specific strategies you could implement. A great way of using this is to look at the Porter's generic strategies model, which says that you can compete by being different, so that's differentiated, offering something that no one else does, or by being the cheapest possible provider. And then also by whether you're going to offer that to a large market, broad focus, or a very niche market, short focus, small focus, narrow focus. So, for example, something that is trying to appeal to as many people as possible, be low cost as possible, is a cost leadership. Someone that's trying to appeal to everyone but be different from the competitors is differentiation. And then you have cost focus, which is where you're low cost with a specific focus, and differentiation focus, where you are being different with a specific focus. And it's important that generally strategies fall into one of these categories, because otherwise you risk being known what is stuck in the middle. So, for example, think about it from the perspective of a product offering from a company or a service offering. It's not cheaper than anyone else. It's not generic enough for everyone, but not niche enough for specific markets. And it's not differentiated enough to offer something that no one else can offer. Well, who buys that product? So let me get this straight. You're not better than anyone else, and you're not cheaper than anyone else. Well, why on earth would I buy from you then? That's what called being stuck in the middle. And I'm sure you can guess exactly where Corjetz sits. It is right in this top corner. It is appealing to as many people as possible, offering to everyone in Hundria, offering them affordable transport, being a local. Everything is about being as efficient as possible so that cost savings can be passed on to the passenger. It is absolutely categorically in that overall cost leadership strategy. That is what it's doing. So what we should be then thinking of is that everything else should be about maintaining that and underpinned by that. If we suddenly start saying we're going to be a really high cost premium provider, that's going against our generic strategy. So what could we do then? We could look at the options that we have available in the Ansoff's matrix. And again, this is useful for coming up with strategies, also useful for categorizing the risk factors of strategies. Risk, of course, important at your SBL, and it's important that you're not talking about strategies without thinking about the risk involved with them. So naturally, an existing market, so your market penetration, where you are basically expanding upon an existing product, existing service, an existing market, is low risk. You already know the market, you already know the service. So that's low risk. Where if you've got market development, that's where you're taking what you already do and trying to offer it to a different customer or a different marketplace. It's medium risk. You know the service, you don't know the market. The flip side of that, or vice versa of that, is product development. You know your market, you know your customers, but you are offering a new service. And then diversification, of course, is the high risk, because it's a completely new market and a completely new service. So some common examples of market penetration would be further marketing strategies to try and boost your sales, expansion of your existing services within your existing markets, offering new routes within the current area, etc., and integrating technology to improve performance. Market development, trying to target new passengers, new routes, operating in new continents using your same business model. Service development, product development, new services such as business travel for your existing customers, international travel for your existing customers, or maybe cargo, although cargo you may put in diversification because it would be a very different market and a different service. And diversification would be going into conglomerates ownership of things such as, well, we want to diversify out our risk in the airline industry. We know if something happens to the airline industry, we'll be in trouble, so we want to diversify into other industries so that we're protected. So for example, you want to start in the automobile industry or anything like that, something completely different. But if you do succeed in that industry, you're then diversified, which means if something happens to the airline industry, you've got that to fall back on. Or vertical integration, so this would be maybe purchasing parts of an airport, purchasing an airport, or purchasing an aircraft supplier or a partner, where you are integrating yourself across the supply chain. Now, of course, that's very high risk, and it may not be something that you would recommend doing, but that's an example of diversification. And once you've decided upon your approaches, what kind of strategies you might want to implement, you need to think about how you're going to grow that strategy. Whether you're going to just develop that slowly, whether you're going to acquire a company, whether you're going to undertake a joint venture, which is kind of in the middle, or divest something so that you've got more resources, more money, more staff, etc. to put towards the new strategy. So internal development for, say, something like a new service, or branching into a new markets, or cutting costs, increasing efficiency. This is when you do everything in-house. Everything is much slower, but perhaps it is done with cost efficiency in mind, which is important to Corjetz, and also it's very controlled. You know exactly what you're doing, you're in charge of everything. Acquisition, on the other hand, to perhaps expand your services, is where you purchase a supplier or a smaller company or a smaller competitor, etc., to try and branch into overseas markets or anything what it might be. Now, acquisition is very, very expensive, but it's very quick, and you come with the brand already involved. If we wanted to expand into the full service range, for example, what we might do is find a small full service carrier and purchase them and keep the branding the same. So it's a brand that's already associated with it, and we've already got all the different assets, the lounges, all the check-in things, all of that is covered already. So you're buying something that's ready-made rather than having to try and do it yourself. And also, of course, you're then keeping your brand separate, so you're not muddying your brand of being this low-cost provider, and you're not muddying the new brand that's supposed to be a full-service provider, etc. Because of acquisition, you need to make sure you do all your due diligence effectively. It's very high risk, very expensive. There's a lot of problems often with integration when you have an acquisition. So what you may do instead is have a joint venture. So again, this is where you're trying to achieve the same thing, the same aim, but you're doing it with another company. So you're working together, pooling resources to create a crossover brand. So perhaps you're looking to work with there's a full service provider overseas that's looking to expand into the Hungary market. So you work with them to create a new brand. You've got their experience of full service. You've got your experience of the Hungary market. Now, of course, the benefit of a joint venture is it does mitigate some of those acquisition issues where you're taking on a lot of costs because you're splitting the costs. You're splitting the resources. And you're not worrying about not having the brand recognition or the product knowledge because they've got that. You've got the market, they've got the brand. Now, of course, the problem with that is that you will then share the profits as well, naturally. And also, you need to make sure it is a balanced partnership because unbalanced partnerships never last. If you're giving up everything, giving up loads of information, and they're not, then it's an unfair balance. So you need to make sure that they've got your effective agreements in place to make sure you're balancing everything, make sure it's a give and take partnership that is balanced. And divestment is when you might stop underperforming services to invest in new ones. So this is another form, I suppose, of internal development, but you're doing it by stopping, perhaps there are routes that are not as profitable as others. We've got flights to this particular destination that are really unprofitable, and we want to expand to this area where we think there's going to be very profitable flights. We don't have the money for new planes, new airport slots, etc. So maybe you free up money, you free up assets, free up resources by divesting those routes that are no longer profitable. So lots of ways in which you can grow as an organization, which Corjetz could do it. And that's why I'm just going to summarize things now with a business strategy. Remember that this is not an absolute definitive answer or anything like that. You might get lots of different issues in the exam. This is just an overview of what sorts of things we've picked out from the pre-scene. So things that the organization should ensure that they do is not move away from successful areas of the business. Keeping doing what you are doing in many ways is a strategy. And students often make the mistake of thinking they have to do something new. Everything is all about doing something new. We have to expand our services. We have to have more integration. We have to have subsidiary companies. We have to do business class. We have to do cargo. Well, that's a big risk. And we're already very successful. If trying to achieve any of those new plans negatively impacts our key markets, our key customers, negatively impacts our critical success factors, negatively impacts our strategy, then we shouldn't be doing. They're not suitable. Think about your SAF model. They're not suitable for us to do that. So never compromise what has made your business successful in the first place. That's something that people often forget. And so the primary thing should be ensure you are continuing to focus on the successful areas of the business. Then potentially look to expand, look to diversify, look to go expand your existing services. Maybe look at that international multi-regional approach. Look at CSR programs. Look at maybe creating subsidiary brands that can expand without muddying your existing brand into cargo, into full service, etc. All of these are potential opportunities for the company. And throughout everything as well, ensure your key contacts with your stakeholders, your partners, your shareholders, the public, the regulatory boards, the air traffic control. Ensuring positive communication relationships as well is an important strategy to make sure you are undertaking. So that brings us to the end of this strategic analysis. I hope you have enjoyed it and found it useful. And I hope that has served to give a general overview of what the organization is trying to achieve, where it currently is, its current market position, and what kinds of strategies it can implement to potentially help move it or continue moving it towards its overall purpose, its overall strategy, whilst maintaining those values, those factors that have made the organization successful in the first place. So thank you for watching, and please join me for the final video in this ACCA SBL video series. We'll be looking at some of the key issues that came out of the pre-scene. So thank you, and please join me for that video. So thank you very much for watching this video. I hope you have enjoyed it, and more importantly, I hope you have found it useful. If you did enjoy this video and you want to see more of it, or if you are studying for the September 2023 exam for the ACCA Strategic Business Leader, then please do visit our website www.astranti.com. We have a free ACCA SBL pre-scene pack that includes all 3 videos for the pre-scene analysis, the strategic analysis, and the top 10 pre-scene issues. In addition to that, we also have our industry analysis document going through the airline industry, and 2 ACCA SBL mock exams with complete solutions for you to practice ahead of the exam. And also, you have access to our SBL discussion board, so you and fellow students like yourself in the same position studying for this exam will be able to chat, will be able to ask questions and receive answers from our tutors. And the best part is all of this is completely free. In order to access this, please click the link in the description or visit the website www.astranti.com and sign up for our free ACCA SBL resources now. So thank you again for watching this video, and do check out that website for more free content.